All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining us. If you're just joining us, and it's my job to make you stay all day. How about that, right? So let's see if we can get a look at some of these markets right now to see what's been happening. And, you know, these markets are important. These markets are your money. Why don't we take a look and see what's going on in that May corn? Up 3 cents there, 771 3/4. Kind of a quiet one. But it looks like we've got some decent action in the deferreds. 721 3/4 in the new crop D's, up 5 3/4 cents. So that's a green screen we'll take. Let's see if we've got anything better over in the beans, and I don't think we do, folks. Let's take a look at the bean price here. 25 cents lower in that May contract, 16.64 even. But let's go out to, say, November, where we were trying to get a 15 handle on it. We did overnight as a high of 15.02, but we're 15 1/4 cents lower. That was the wrong 15 we wanted. 14.80 1/4 is last on that no soybean contract. Moving over to Chicago wheat. What's been happening in the Chicago wheat? Well, here we go. Here's some good green for you. The front month, May, 10.85 1/4 is last. That's up 33 3/4 cents. But let's go out the deferreds. Even March out there, 24.5 cents higher to 10.67 3/4 as that May kind of leaves the March behind there by about, say, 9 cents. That spread's moved out today. How about hard red wheat in Kansas City? See if we have some more bull spread going on there. Well, we kind of do if you look at the March way out there. But look, we've got a 40-cent rally in July. 11.50 even is pretty good, right? We also have a 40.5 cent rally in the front month, May, 11.47 1/4. While we're kind of leaving the deferreds behind, especially that March of 23 country. That's only up 18 cents. They want it in the front months here today, folks. All right, let's see. Spring wheat, spring wheat in Minneapolis. Kind of the same, 21 3/4 cents. Same kind of curve change, really. 21 3/4 cents rally in that May in that front. 11.49 even. Moving out, say, even to the D's, it loses 3 cents to the fronts by only being up 19 cents to 11.22 3/4. And then lastly, let's take a quick peek and do a drive-by of cotton. What's going on there? Up 117 points to 133.58. But look, we've got that D's marching ahead too, up 120 points to 116.68. All right, I've got an in-studio guest. This is, you probably all know, you're probably all tuned in to see him, so you don't want to see me. You want to see Chris Swift. Chris from Swift Trading, thanks for joining the show.
Good morning.
All right, I mean, there's any number of things we can talk about today. They've been all on my mind last night, but we've got a food issue.
Yeah, we do.
And I don't know how to, you can't downplay it. And I actually read some scary stuff this morning that said, even if we have a record crop here in the States, it might not really solve it. Where do you stand on that?
Well, we look at the Ukrainian situation quite a bit, and we understand that nobody knows what kind of production that they can actually produce this year, but we're all pretty assured that nothing's going to leave the country. So the exports there are pretty much done for, regardless of what their productions may or may not be. And then here in the United States, just look at the inverted market. All the spot months are trading at the highest level, suggesting demand, and China comes in and buys another 1 million metric tons of corn this morning. Yeah. 2/3 of it for instant delivery or delivery in this year, and then another third for next year. So there is some kind of shortages out there that may not be recognized by everyone, but the market recognizes them.
Okay, so then answer me this, because I don't have the answer. But okay, you're going to have a short-term food crisis. Maybe it could be longer than short-term. Who knows? But at the same time, we've got the Federal Reserve going to raise interest rates 50 basis points for the next 2 or 3 meetings, they say. I mean, that's not setting up to be a very good economy, if you ask me.
It's going to crush a lot of things out there, especially the housing market. I mean, anytime you drive through Nashville and see all the housing and see that really expensive building material sitting out there in the rain and waiting for some contractors to get to work, and then you've got everything of all the other aspects of costing more money, and now the money costs more money.
Well, so those 30-year rates went up to over 5% for people this last week. So that's going to be something we're going to have to keep an eye on, because I think that regardless if you're trading equities, commodities, or fixed income, these interest rate hikes and the way the Fed handles what the economy is going to be doing going forward is going to affect all of us the same.
Oh, absolutely.
So, all right, stay right there. I know you're not going to move, but we're going to go away. We're going to pay some bills. We'll be right back. We're going to talk livestock with Chris Swift from Swift Trading after these messages. All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy, and I am going to use this as a cheap segue into the cattle market, right? Why not? I get to do that every day. I do it probably too many times for everybody's liking, but let's take a look and see what live cattle are doing here. That live cattle market has been quiet as of late, and it still looks to be the same here today. We've got a little bit of a mixed market. April's up 35 cents to 138.17. We've got June up 45 cents to 134.25. But if you take a little bit of a gander out to the deferreds, October and December, they're off just small. Even December off 25 cents there. So not a lot looks like going on. I don't have to be in the market a long time to tell you that there's not a lot happening in that market right now. How about feeder cattle? Well, here, this one's rolled over a little bit, and we're going to see that's probably because we've got a little bit of an issue with higher corn prices again. But this one also, there's some folks that are worried about some technical issues here. So April's off $1.92 to 154.62. And let's pick another one out. September's off $1.80 to 175.25. So we do see some negative arrows on the feeder cattle. And then lastly, before we get back to our guest analyst, let's talk about lean hogs. Lean hogs kind of quiet here, 52 cents lower in the front. And that's April 98.50. Let's take, everything else is between 50 and 75 cents lower. So not a lot happening over in lean hogs either. All right, let's bring back in Chris Swift. Thanks for sticking around. Where's the, does anything pop in this market if we start to see the economy get shaky, or where do you stand when it comes to the livestock market?
Well, the cattle market especially is fighting a battle of two different wits. One of them on one hand says the psychological aspect of the consumer having to shift in discretionary spending habits will impact the beef market, therefore impacting cattle. Another side says, you know what, we have really whittled down that cattle herd to a tremendous amount that we'll be dealing with fewer animals going forward. I think there's a lot of vertical integration that has taken place over the last couple of years that will force some people to have to feed cattle at very unprofitable rates, and then others will probably tend to move to the wayside.
All right, so fundamentally you're still kind of bullish, you think?
I'm a little friendly later on. Right now we've got ample plenty cattle on feed to work with, and nobody seems to be in a dire rush to have to do anything. Feed's the biggest issue.
Yeah, well, I mean, that's what we're going to have to do. You can't eat, you can't eat pens and paper. You have to actually have the food, and that's something that we've been talking about. We had Evercore, a think tank that came through with some research last week that said they think that pork and beef prices are going to be up 20% year over year. That might be low, actually. And then chicken 70% higher, and I'm sure that's from the call, but there's definitely going to be an issue with more expensive proteins at the counter.
Sure.
And this is going to be a big week because we had CPI and PPI this week too. So those inflation numbers are going to really have something to say about where we go forward, don't you think?
Buckle your seatbelt.
Right. That's all I can say, and I think I say it every week, but it's just, there's no way of getting around it. And I said I've been doing this 35 years, but whether you're trading commodities, fixed income, or equities, which are really the only three things we can trade, and there's no hiding. Everybody's got a problem.
Absolutely. And all that money is intertwined, too.
That's right. Exactly right. All right. I really appreciate you coming on, Chris
Always,
Swift
Scott.
from Swift Trading. Thank you very much for being in studio. And I'll throw this back over to Janet.